We've had another profitable quarter from Tesla and plenty of highlights in that report. Have we reached a turning point now? Is this the new profitable Tesla of the future?
Well, it's fairly impressive to see that Tesla in the fourth quarter generated $1 billion of free cash flows. That's more than twice what the Wall Street was expecting, and it was still like 30% higher than what we were anticipating. And so that means Tesla can start a new factory in a quarter and keep ramping and generate that much free cash flow. So yes, there is definitely a turning point there. The second thing that I found absolutely amazing in what we've learned today is that Tesla managed to ramp a new factory with stable gross margins, adjusted gross margin in their auto division. So that means the underlying gross margin of the Model 3 have continued to expand in the fourth quarter. So Tesla is going from being like world class in terms of auto gross margins to doing even better than that, and in just 3 months.
Well, let's talk about that new factory in Shanghai, because one thing that's bound to come up in that analyst call when it gets underway in about 45 minutes' time is cost discipline, and specifically the cost of that new China plant doesn't appear to show up in the financials. So what's your opinion of that?
So as you can imagine, it's probably the one question I'll ask the team on the call in 45 minutes. What we know is that they mentioned the ramp of the cost of the factory, and they mention that ramp affecting their gross margin. So we know it's there in some shape or form. The one thing I can tell you is that if you look at the ramp of the Fremont factory, when the Model 3 ramped early 2017, in the first quarter, like the incremental cost getting into the numbers was in the order of $150 million. So that might be the kind of cost we have to be looking for. Now, where is it exactly in the numbers? The team is working on it.
So Pierre, what question are you asking on the call?
Well, I think we just covered probably the one that comes first to mind, which is what's the rough order of magnitude of the cost of the ramp of the Shanghai factory, so that we can evaluate the improvement in gross margin of the company, excluding that ramp, because that's what is going to give you the best indication of where the gross margin of the company is heading towards the end of this year.
Pierre, it was interesting that the company came out and said that they don't see the average selling price changing meaningfully. We know they just lowered the price of the Model 3s over there in China to help compete. Do you think that that lower price tag now sticks to gain market share, or does this help them perhaps go back up and boost prices again?
So that's a good question, but it's very difficult, to interpret the price movements for Tesla. So of course there is an element which is being competitive, but the good thing for Tesla is that you don't really have a competitor to the Model 3. In China, I think the key element is affordability. How much can you? It's a very sensitive measure, so you can lower a price by a few $100s or even maybe a couple thousand dollars, and massively increase your addressable market. We've seen in the beginning of the Model 3 in the US a lot of price adjustments, months after months, and now it's more stable. So the company has to find its sweet spot in China, the price where they're going to optimize how much money they can make per car and how many cars they can sustainably sell. The one thing I can say is that the Shanghai factory is probably going to be very significantly more efficient than the Fremont factory. For a lot of historic reasons, Fremont is a very messy factory. It's not efficient. The capital cost of Shanghai is less than half the capital cost of the Fremont factory if you compare them on a like-for-like basis. So there is an element for Tesla to invest like an improved cost position into even better pricing in China, and that's what you see in this price movement.
Pierre, before we let you go, I want to get your price target for Tesla. I know it's pretty high. Our last guest on the subject had a sell rating on Tesla, so the stock is divisive as ever. What's your bull case?
Yeah, it's divisive is the least you can say. I lost a few friends in that story, to be completely honest. My price target is $800. And to give you some background, the price target, the previous price target I set 2 years ago was $530. So I really look at Tesla on a 5-year horizon and what kind of potential the company has. And my thinking is actually very simple. Beyond 2025, Tesla is going to be as large as BMW, much more profitable, and is still going to be gaining a lot of market share, and is potentially going to start expanding again margins with a software product, with like the autopilot product getting to maturity. And so when you look at that, it means by that time the stock will be between $1,500 and $2,000, which means that having a price target of $800 for the end of this year seems against all odds reasonable.